Are you self-employed, but you've had difficulty getting approved for a mortgage? Well, in this video, I'm going to talk about a non-QM product called the bank statement loan. And non-QM will stand for non-qualified mortgage. And this is a product, there's investors out there that offer this product that will allow you to potentially get a home loan if you meet some specific criteria. And I'm going to take a little time in this video to walk you through some of the specifics of the program and see if it's something that maybe works for you. So there's a lot of self-employed people out there that can't show or do not show a lot of net profit on their tax returns. Perhaps it's due to the way that the nature of the business, or perhaps it's just due to the fact that there's a lot of expenses or deductions that can't be added back into qualifying income for a normal conventional or QM type of mortgage. And so in these particular instances, we'll typically look at what we call a bank statement loan. And a bank statement loan is normally going to ask for at least 12 months of bank statements, potentially up to 24 months. So you'll have to have been in business for a while to qualify for this product. And it's also not for someone that says, I really don't have any cash down. Obviously, there's some risk involved with this loan, and the investors expect that you're going to have a reasonable amount of equity, typically 20%. In some cases, you can get approved with 10% down. However, the rate is not quite as attractive as it is with a 20% down mortgage. And so the way that the bank statements work are this. You provide the bank statements, the investor is going to look through those bank deposits, see which ones are qualified deposits. Not every deposit that you put in the bank statement is going to be qualifying. It's got to be basically related to the business that you are running. And so once they tally up all of those particular deposits, they'll take roughly 50% of those deposits. There's some nuances depending on how many employees you have, those types of things. Do you have someone that you're paying inside of your company? So a lot of times self-proprietors, they don't have any other employees. And so you can use a total of 50% of that income to qualify. So for instance, if you had $180,000 worth of deposits, you would have $90,000 worth of qualified income. And so the next question is, what do rates look like? Well, honestly, it's not going to be market rate. Once again, this loan is going to be slightly riskier. This isn't one that's sold to your normal GSEs, your government-sponsored enterprises like your Fannie Mae and your Freddie Mac. It's an individual investor. So, as I mentioned before, they're going to want a down payment. Typically, you're going to want to put at least 20% down. And then they're also going to expect to pay a little bit higher interest rate. However, what is the alternative? There really isn't one. So if you are in this position and you're like, hey, I really want to buy a home, this may be the avenue that will allow you to get into home ownership. It certainly will be renting for the next 5 to 10 years. And depending on what happens inside of your business, maybe down the road, there is potential for you to file taxes in a manner that shows additional income. And in that particular instance, maybe you can refi out of this loan into a normal qualified mortgage or a conventional type of loan and improve your interest rate. So hopefully this video helped. If you or someone else could use this information, please like and share and subscribe if you like this information and you want to get more content.